Shiva, can we start?
Yes, sir, you can start.
Awesome. So, ladies and gentlemen, good morning. It's a pleasure to have you with us at yet another CX Roundtable by Tata Tele Business Services. We've been doing this for some time, and we're super excited about bringing in some of the marquee business promoters, leaders on a forum where we discuss a variety of aspects, right, in this transitioning market. Today, this is a fintech focus session, and we have some amazing panelists with us on this session. I have Sunil Kumar, who's the Chief Operating Officer at Carbon Cards. I have Abhishek Kothari, who's a co-founder for Flexi Loans. I have Ashwin Chawla, who's the co-founder, managing director, and CEO for EscrowPay India. And I have Kashish Grover, who's the Chief Investment Officer for LegalPay. My co-host and representing Tata Tele Business Services with me is Gaurav Varshney, Deputy General Manager, SME Regional Marketing and Enterprise. Gentlemen, it's a pleasure to have you with us. Fintech has rocked the world, right? I think 2017 onwards, 2020 was, a differentiating year, right? We've been talking about business transformation. We've been talking about transitioning customer. But, at the back of all of this has been fintech in many, many ways, right? Now, each one of you is serving for a very different cause, right? And we're going to cover that through the course of conversation, but it's all coming together beautifully. It's all very, very interesting because the consumer is getting empowered at the end of the day. The brilliance is, how beautifully you've been able to, with agility, deliver a phenomenal experience to the consumer, right? You've been able to fulfill their expectations. A lot of traditional organizations are not necessarily prepared to give that kind of an experience, which new age fintechs have done, right? Be it loans which are available to you in under 30 minutes, be it investment options, be it buy now pay later options, right? Be it credit cards for corporates. There have been products that existed, right? But these were products which were essentially very archaic in many, many ways. They took forever to get delivered, right? The experience was very, very different. Startups have really cracked that. Apart from that, they're also focusing big time on trust, right? That did not necessarily exist in the digital ecosystem. People were always underconfident, which escrow-like services are now kind of cracking, right? So this becomes a very exciting discussion, with all of this perspective that we are going to, talk of and cover, and more importantly, how technology in your businesses has empowered you to do well, right? And to continue to, offer that consistency and delight to your customers, which has become so much more important. What this will also do is, while of course it's going to be relevant for a lot of fintech founders, what it's also going to do is it's going to motivate a lot of people who are on the fence, thinking of digital transformation, to understand the requirement of the changing market, right? And possibly it's going to serve as a motivation for them to adopt to the changing consumer ecosystem. With that, I'd like to bring in Gaurav Varshney to do a quick round of introduction. Gaurav, like I said, is from Tata Tele Business Services. Gaurav, over to you. Please take us through, some of the exciting work that you've been doing in Tata Tele Business Services. Of course, we're going to cover that through the course of our interaction today, but a quick round of introduction is going to be helpful.
Sure. Thank you, Ashu. Thank you for setting this up so nicely. Good afternoon. In fact, good morning, gentlemen. My name is Gaurav. I represent Tata Tele Business Services, and I look after the marketing piece for Tata Tele Business Services. In the organization, we are primarily dealing with SMEs across the country, helping them, adopt digital transformation, helping them evolve through this period of pandemic, and then how do we, move forward from this pre-pandemic session to the post-pandemic. So, honestly, fintech has done a wonderful job in the last 2 years. I was just having an offline chat, and I was just telling, the panelists that I was a part of the fintech industry for a period of time. And the kind of adoption and the acceleration this, the fintech industry has provided in the last couple of years, I think that's phenomenal. I mean, nobody would have, expected that movement or that transformation in the last 2 years. But looking forward for a power pack session from all the panelists, and let's just start, I think.
Awesome. Thank you, Gaurav. Thank you for doing that. Today the theme that we are kind of trying to cover in the session today, right, is basically focus on delight, right? So we're going to largely be talking about achieving customer delight in fintech with agility and smart tech, right? And I think these are two things that are the most consistent, right? When you talk of fintech in general, right? But before we dive into the session, I would like to have each of my panelists quickly introduce themselves and tell us a little more about the good work that they've been doing, right? So Sunil, I'm going to come to you first. if you could tell us a little more about yourself and the work that you're doing at Carbon Cards.
Thank you, Ash, for setting up this session. I'm glad to be here and part of this esteemed panelist that you got here. Myself, Sunil, I'm Chief Operating Officer at Carbon Cards. We basically provide corporate credit cards to private limited companies. When we started our journey, everyone told us that you're fools to give credit to startups because startups typically don't even survive 1 year or so. Well, we were fools to start with, but we evolved from where we started, and now we are able to give credits to some of the biggest startups in the country, like Unacademy, PharmEasy, and whatnot, and a lot of early stage startups. Also, we are now able to give credit to a lot of listed companies like Kalpana Industry and whatnot. So we have come a long way, and I look forward to discussing more about this and fintech with you.
Super, Sunil. Thank you for making it. Abhishek, I'll come to you. Abhishek, in fact, I would start this discussion with you, right? And in just a bit, but post this introduction, largely because all of what we talk on in the fintech ecosystem, right, has been built on the back of lending, right? And you represent that, right? One, and I think in many ways you've been a champion of a lot of practices that have been built over a period of time, right? So a quick round of introduction and a little more about Flexi Loan before we start the conversation.
Sure. Thanks, Ashu. And I mean, always very difficult to match your energy. So we'll try to make it as dynamic as possible. But a little bit about me. We started Flexi Loans back in 2016, and at the core, the problem that we're solving is how do you get credit in a sachet to the last MSME in this country?
Right.
About 60 million MSMEs. And take whatever report, whatever math, 80% of them are not borrowing from core financial institutions in this country.
Right.
It's a $250 billion gap. They contribute to 50% of India's employment, and only 14% of bank funding goes to them. So the gap is massive. Take any ratio, the credit to GDP ratios, we are far behind the other countries. So our objective is that by doing these little things, can we contribute directly to the GDP of this country and make the life of an MSME better? It starts with lending because that's something that everybody needs and it is an immediate gap. But as a company, we are focused on solving the problems for MSME for their entire growth. So today it's lending, tomorrow it will be something else. And that's what our focus has been. We are a digital native organization, one office in Bombay, and we service pan India. So the 18,000 pin codes, 1,200 cities, no feet on street, no DSAs, no agents, no branches. And we give loans to every MSME in this country who would come to our website. So it's a fascinating journey, and love to talk more about it later.
Interesting. Who would have thought a model was possible like the way you're possibly doing it, right? I mean, you talk to any banker today, and they would typically rave of the infrastructure that they've built, right? Possibly they didn't realize that it's going to become irrelevant, as this economy grows, right, and as the digital option grows. But Abhishek, good to have you with us, and my sense is I think you and Gaurav have a lot to talk about by the end of this conversation, right, or an offline setting. Tata Business Services deals with about 85,000 plus SMEs, MSMEs across the country, right, and I'm sure there is definitely an offering on that one. Ashwin, I'm going to quickly come to you. You're solving for something very, very critical and very important, right? And that is, empowering and enabling the trust in transactions, right? Something that did not necessarily, people were always iffy, and that's largely because we've been in an economy which is kind of picking up on digital. We've been picking up on basic education, right? We've always had trust deficit, right? And that's something that you are empowering the digital ecosystem, right? You're bringing a little bit of a sanity and a comfort to many, many people. Quick round of introduction, Ashwin, to Escrow and yourself.
Thanks, Ashu, and big hi to everyone, to all the panelists here, and everybody who's viewing this particular program. So I am Ashwin Chawla, CEO and founder for EscrowPay. So we are India's first escrow-focused neobank that allows any person or business to actually set up and monetize their businesses via digital escrow accounts. So whether to collect all rails, fraud management, remote settlement of funds, especially for the SMBs, and as the person said before me that 65 million SMEs in the country. I think the important bit is that they need to get paid on time. The fraud element need to be removed. And our research over the last 7 years of our business is that any transaction upwards of 50,000, the trust deficit goes extremely high. So to cover that element of risk in any transaction, especially for businesses, it is important that an escrow account, and that's the reason we are here. And also why we started the business is because we felt that the escrow technology by banks is in fact a patchwork and is running on an outdated infrastructure. And that's the reason it takes about 60 days for them to open an escrow account, whereas we do it in seconds. So I think that's a very important thing that we are doing for the country, and it's our humble contribution to the fintech ecosystem in the country.
Interesting, Ashwin. I think the inefficiency in banking is a common constant for fintech to really come up, and I'm sure we're going to talk more about that. Right? I think that's a common constant across each of you as well. Kashish, you're my last speaker in this panel, right? And there's something that is incredibly interesting that you're doing, right? You are essentially the last or the second last leg of fintech overall, right? You're evangelizing, or you're kind of democratizing investment options within legal products, right? Now, honestly, that necessarily did not exist in that form and way, right? We're essentially only an economy which is kind of continue to talk about debt markets, equity markets, mutual funds, right, and some more structured assets, right?
Yep.
What you've offered is a completely alternative solution, right? And you're actually the first one to do that in India. Tell us a little more about yourself and Legal Pay.
No, thank you so much, everyone, and hi to all the panelists, and really appreciate Ashu and Gaurav for this. Wish good health to all our viewers, and hope we come out much more stronger from this pandemic. I come from investing strategy background, have all my life work on finance, investing strategy, worked with a couple of years with Goldman Sachs, PwC, and had my own startup in this space. So coming from a background of finance and merging it with the legal concepts is something that we conceptualized very well in the industry, enabling investors to invest into alternative asset classes in legal and insolvency market, which solves both the problem. It solves the problem of 20 lakh full balance sheet crisis that India has been dealing over the last 2 decades or more. And it also enables investors to invest into such asset classes. That's something that we provide over-the-counter solutions for such niche asset classes, and which in our small bit of piece help in the churning of the machinery of the Indian stock system. So looking forward to it for the discussions.
Gaurav, I think with all the speakers that we have, right, I think you'd have a definitive takeaway for a large base of customers that you have, right? I think you have many solutions right here. With that, gentlemen, I'm gonna dive into the session today, right? Abhishek, my question to you first, right? Now, I mean, we continue to talk about the inefficiencies in the banking ecosystem, right? 2020 has been an very unreal year, right? I'm actually going to start from there, because this was possibly a year which made businesses, consumers in general, look at fintech companies a little more seriously, right? And that was largely because of the speed, and traditional ecosystem was not necessarily prepared, right? I'd love to understand from you. Of course, this is now my understanding is at a certain distance, right? And this is something that you are dealing with on pretty much a day-to-day basis, right? What's been your experience, right? How has the consumer behavior changed, right? In a post-2020 environment, right? I'd love to hear from you in terms of, when you talk of loans in general, it's a very transactional relationship. Whoever can get you the money the fastest, right? There's not necessarily a relationship that gets built in the process, right? But 2020, like I said, because the tradition.
Did I lose Ashu or?
No, I think there's some issue at his end.
But I think, Abhishek, you should go ahead with the answer, whatever you heard.
I think the question is pretty clear. Yeah, let's do that. Look, when 2020 happened, and if you look at the lending workflow, there's effectively 3 problems that every lender is solving, which is how do you get access to customers, which is the distribution part of it. How do you assess the customers, which is the risk part of it. And then how do you collect it back, which is the collections part of it. Everything else is effectively APIs and workflows. But at the end of it, and when something like this pandemic hit, the physical access to customers is removed, and there is health risks that are kind of the macro factor starts affecting the credit risk of a loan that you've given out. And so everything goes for a toss. How do you now reach out to a customer who you could earlier reach out to physically by just going to their shop. How do you assess the risk of a customer whose balance sheet was absolutely fine, whose bank statements are absolutely fine, and suddenly a lockdown happens and they're in a category which gets hit the most, and your risk models don't hold true anymore. And similarly, when you're going to collect, you have to kind of balance it with the fact that there's a health risk, and the fact that the customers may have moved their location from to their hometowns. And so all sorts of processes and technology and models that you build effectively stop holding true. And that's when the reinvention happened. Luckily, we were at that part of the curve where the reinvention was the lowest, because we already had a digital model for acquisitions. And so it is easier to just go in and kind of double down on the origination channels that you built. For example, we are an embedded finance player. So large players who have MSMEs on their base, like an Amazon or a Flipkart or Pine Labs, we partner with them to offer lending services to them. And so it's easier for us to now, and e-commerce grew significantly during the pandemic period. So some part of it is just choice of business. Some part of it is just being lucky or unlucky, but the distribution holds true in a digital environment far more than in a physical environment today. In the risk part of it is where the game completely changed. There is absolutely, and nobody can say, including me, nobody can say that we figured out in the post-pandemic environment what's the best way to assess risk, because the demographic averages have changed. The good has become better, the bad has become worse, and there's a fat middle that is sitting in, where the bureau scores won't hold true, where a lot of other factors won't hold true. So it's in the past, what had happened was there was a macro event every 5 years, 10 years. Abhi kya hota hai? There is an event every 1 year. So there is a demonetization, then there is a GST introduction, then there is guidelines changes, then RBI comes up with something, then there's a pandemic. And so the ability for any lender to stabilize their risk models and create something which is based on alternate data to be able to capture a larger portion of the population to give credit to, it becomes increasingly difficult. So today we all talk about fintech as a methodical way of technology to penetrate better. But there is a time when the compounding effect really comes, when the ability to understand risk is the right way to increase credit. Because technology then is, again, as I say, it's about APIs and workflows. But at the end of the day, do you know your customer? Can you collect money back from them? And do you understand the risk that you're taking on your book? That's all about risk models, data science, and alternate data, which is where I think we need to do a lot more work. Collections, again, is, I think there's a lot of work to be needed, even in a post-pandemic environment. I don't think we've solved the problem of seamless collections. In fact, I know players who would rather not collect and charge higher then go and spend that collections money elsewhere to get that money back. So post-pandemic world is better for lenders. It has allowed embedded finance to flourish. It has allowed products like buy now, pay later to become the first source of credit. And so there is definitely green shoots out of what is coming around for fintech. Imagine there were six unicorns in the last 6 years, which were fintechs. And in last 1 year alone, in 2021, there are 10 out of the 42 unicorns were fintechs. So you can imagine the pace and the ability to impact is tremendous. Whether it is SME lenders, consumer lenders, and even players who are making the entire workflow become possible. Like what Ashwin said, like what Kashish is saying, there are different aspects of how you can affect credit. Alternative investments, whether it's about the uptick in investments on public markets. There's just so much happening that fintech is the future. There's no doubt about it. Gaurav, you're on mute.
Sorry, absolutely. I mean, perfectly said, Abhishek. Sunil, what's your take on it? Because, I mean, I'm sorry, I'm just taking over from Ashu till the time he joins back. So let me just try and attempt it, although that's not my core area, but let me attempt it. In the last 2.5 years, obviously we have seen banking and payment has been the critical pillar for the country, right? I mean, including SMEs, because if you look at it for the last 3 years, I think SMEs are the one who have been contributing handsomely in terms of the GDP, in terms of the growth for the country. So how your organization has actually helped? Let's say you talked about startups or maybe giving credit cards to startup. How has been your experience in the last 2.5 years?
Sure. Thank you, Gaurav. So fortunately, or unfortunately, we had tremendous growth during the COVID phase, like what Abhishek said earlier. And it was primarily because we were the digital first. So earlier, our customers used to tell us, hey, come to our office. We'll sign up on the card. We'll understand what we need to sign up, how your product works, and anything and everything like that. Just now, like we are hosting the Zoom call, we are now able to close the deals over the Zoom. So we went ahead in terms of both market share and serving our customers through Zoom because the customers preferred that, and we were ready from day one, and we were reluctantly doing the physical contact. So the customers like that, and we had faster adoption during this COVID phase, and now this has become standard. So it has been boom, at least for all digital lending companies or all digital enablers because of COVID, and people started accepting it. So that has been the big change. The second thing which used to happen earlier, and this is something the banks still do, which is called personal, visit or even personal phone call to understand more about the business and things like that. Since that was not possible for the banks, and we actually never had that in the place, we were able to provide the credit, even though it is of a smaller duration, but it does help the companies on working capital much faster, and the customers were pleasantly surprised through that experience. So COVID, I think, has been good from digital. We had a lot of suffering, just like everyone else during this phase. But just like, demonetization brought in a lot of digital play, especially in the consumer. COVID brought in a lot of digital play for lending, for underwriting, and all the paperwork digitally for businesses. And I think that has been the biggest change. And I believe my panelists would agree with that also.
Absolutely. Ashwin, your take on it, because, I mean, what Sunil and what Abhishek said, are absolutely, on track of what we have been discussing. I think what pandemic has done to the country is that, it has brought, or it has actually accelerated the digital transformation journey. What we would have achieved, let's say in 10 years, 15 years down the line, we as a country have been able to achieve in the last 2 years itself. I mean, if I look around, the SMEs that we as an organization are catering, I mean, they really never thought about the kind of infrastructure or the kind of digital transformation tools that they needed, during, let's say, 2018. They were like, whatever I'm doing right now is fine because I'm an SME. I don't need to invest too much into anything right now. For me, cost saving is the only option to make margins, right? And here we are, 2020, the whole game changed, right? I mean, people are investing into technology. Cybersecurity has been a lot of, especially in the fintech industry, the banking industry, and the payment industry. So how do you see, things change in the last 2.5 years for at least your customers and for your industry? Ashwin, you're on mute. I'm sorry, you're on mute.
My apologies. Gaurav, I think it's a great question. And taking you a few years back, our pitch used to be about 4 or 5 years back that escrow is not, like applying for a credit card. You walk into a bank, you fill in the application form, and bang, 10 days later, you get a credit card. Things have come a long way since then. And during COVID, I mean, of course, nobody expected this to happen. And the crisis was huge and made all businesses to pivot from where they were. So during COVID 1.0, I mean, talking about escrow pay, we introduced digital KYC, smart contracts, e-signing, collection from multiple payment rails, and remote settlement of funds. And then came COVID 2, though we were a little prepared, but obviously nobody expected that to reoccur. So during COVID 2.0, we went a step further, introduced API capabilities, smart dashboards, instant reconciliation of accounts, etc. So we strongly believe that the technology has to be a wraparound of ease. And COVID made that happen. People who had questions, for example, on what technology can do in terms of payments, look at even the lowest strata of society of people using WhatsApp Pay or Google Pay and so on, right? Payment gateways have risen to a new level. So we believe that for the SMEs, it's all good. It's good for the country. The more payments open up in terms of tech play, because it now brings in layers of, as I said, about smart contracts, about KYC. So you want to deal with people who are KYC verified. You want to be dealing with people whom you are sure that the funds lie in a third-party account till the time you complete your goods and services transactions. And then especially for the lending clients whom we are serving, in our business, whether it is a co-lending, revenue-based financing, supply chain finance, and these kind of models that are in the market in financing scheme of things, we play a very crucial role in debiting the recurring payments or recurring collections, I would say, into the escrow account, and then doing multiple splits, whether it's multiple pay-ins from all rails or multiple payouts from all rails. Our business now supports every element of the lending. And how we came into existence is because when we started out 7 years back, banks used to take about 60 days. Circa 2022, they still take 60 days to open the escrow account. So I think nothing has changed as far as the banks are concerned, and we have gone ahead in terms of adding capabilities, and the other solution that we have created is that, which we call in our firm, it's called the medulla, which is the nerve center that we've created, where we've dropped down the client onboarding time from about 10 days about a few months back to just 48 hours now. So I think the API capabilities have built in, and the stakeholders, whether it's regulatory, whether it is the banking or the other stakeholders that form part of our business, they've been very, very supportive. And I think COVID, unfortunately, in terms of the pain points that it brought in the segment, but largely for the payments ecosystem, largely for the betterment of the human society, especially for all the businesses that are operating, I think a layer of trust or the element of trust or enabling of trust is pretty important for any SME, because you're working only to get paid on time and deal with verified people. You want to know whether things are going to be straight and simple in terms of when you close the business with the client. So I think and for us, 99% of our business is referral and recurring. So I think that's a big change that has come post-COVID.
Sure. Thank you, Ashit. I'll come to you, Kashish. You've been, you're already, I think, far ahead in terms of digital, journey or digital adoption, and you're India's first third-party, I think, litigation, fund claimer, right? What's been your journey, let's say, in the last 2.5 years, and how actually, I would not say pandemic, but how this whole, fintech or the banking, transformation has actually helped you as an organization, moving in your direction.
Very fair. And I would, before answering that, I would say we are in the business of trust. In fact, every one of us is in the business of trust. I mean, it's easier to, I won't say easier, but it's still relatively easier to convince your wife or a girlfriend about the fact, but to convince your clients, to convince your potential investors, I think that's the toughest job. And for us, both verticals, be it the supply side or be it the deployment, both are essentially important and very important to us, because both are the cycles of the same pillar. For us, two different verticals that we operate in. One is definitely third-party litigation funding services, where we are working with different brands in India. So and some of the marquee names of brands in India, and helping them in debt recovery. Like what Abhishek was saying, lenders choose not to recover the money and forego it than incurring a collection cost. And I think that's something that we solve with various debt recovery solutions that we provide. In addition to that, within insolvency, I think that's a very strong play for us. We work with different resolution professionals and helping them provide superior lending services. These are the two verticals we operate, and definitely on the supply side of it, we work with different banks, NBFCs, we work with small finance banks. Now we are also enabling our investors to invest in such asset classes. So I think that's the entire ecosystem which supports us, and we are glad to be at a place where it's niche for itself, but yet enable the entire ecosystem to close that loose ends. See, and as restating what Abhishek, Sunil, and Ashwin was saying, it's very important. It's very easy for you to lend the money, but you have to collect it back. What in case you don't, or you are not able to collect it back efficiently? That's where we come into play, the last leg of recovering the money.
Sure. So thank you, Kashish. Abhishek, I'll come to you because I've actually, had some opportunity to work with FlexiLoan during my earlier stint. I think Kashish also talked about it and touched upon the trust factor. I think you need to actually, you need to help us understand in this whole last 2.5 years, or maybe before than that, especially in a little muddled time where people were not sure whether they're going to pay back the money, whether the money is going to be actually paid back to the organization. How has been your outlook towards it? Because you are in a business where you're lending money to an SME. I mean, which is actually a little, tricky, right? Because you're dealing with somebody who's not sure whether the business is going to be doing fine. You're going to be, here and there. What's been your take on it? I mean, how have you dealt with this whole situation?
So trust is, and of course, it's a long topic, and it is not just built into technology or into a business model. It's essentially in every action that you show. Do you display an activity that leads to a sincere outcome at the end of it? So I mean, come to think of it, it's rocket science, but it's not rocket science. It's not a lot of people do it right. But if you come about building an organization, especially a lending organization, and there are examples, right? For example, there are simple things of how you would show the charges of a loan to a customer, whether it's clear, upfront, transparent, standardized or not. If it's not, then you're hiding something. If it's clear, then it's clear. So there is that. And a loan journey is typically a 24-month relationship. Just single loan, forget the fact that it's renewed. And there are about hundreds of touch points with the customer, whether it's on the application, whether it's with the underwriting team, whether it's with the collections team, whether repayments. So at every point of time, and our business model particularly is more complex because we are a platform. So we've got these 40 ecosystem partners on one side who we are powering lending for, and about 12 co-lenders on the other side, along with our NBFC who's powering the capital for this transaction. So now we've got not just the customer, but also the platform reputation to manage, and also the co-lender and the origination partner reputation to manage. So for us, trust is not secondary. For us, being sincere is not secondary. And Ashu and I, in our last conversation, we had a long conversation around the fact that in lending, how do you bring a responsible organization? But that's what my take on trust is. Ashu, welcome back.
Thank you very much. Speaking of delight, right? And pangs of technology, right? That's the unfortunate part.
I can't be more glad than you're back, honestly.
Thank you for that, Gaurav. Sorry, I was away. I am gonna just pick it up, but Gaurav, whoever you want to ask the next question with, I think that'll.
No, I think I leave the job to you, Ashu. I was anyway was going to.
Awesome. So awesome. So I'm gonna come to Sunil. Sunil, what's been your experience, right? Post 2020. How's the ecosystem changed, right? And like I said, right, I mean, Abhishek, of course, gave us a phenomenal view, and all of you are very close to understanding this very significant change in behavior, right? What's been your experience? In a way, carbon cards has been a product which has really come to fore in the times that we've seen, right? In 2020, in many ways, right? What's been your experience in the process?
Sure. Glad to have you, Ashu, back.
Thank you.
And while you were away, Gaurav took the lead and asked this question to everyone. But let me not repeat my answer for the benefit of our audience and the panelists here, and share something different here. So, look, we all know what happened during COVID. A lot of lives were lost. A lot of businesses were shut down. And it was an unfortunate what happened, but I'm really glad that we are where we are today in terms of both health, vaccine, the business recovery also that we are seeing. If you look at the Nomura index or any other index, I think we are much stronger footing than what we were earlier. With respect to carbon cards, as I mentioned earlier, we had phenomenal growth during the COVID phase, and onboarding, activating became much easier, and we became far ahead of banks in terms of our service.
Right.
Apart from that, I think what also changed for us was, the processes. There were still some physical touch points that we had. And we internally, made sure that those physical touch points are taken care of.
Interesting.
Whether it is even on collections. So, as Abhishek mentioned, that you need to have people on the street to do collection, and that's what banks typically do. But the question is, in this digital age, how can you even automate the collection? So we made NASH as a mandatory part of the onboarding journey. And that provided a lot of relief to our customers also, because then they don't need to worry about making that payment, or if they don't make the payment, that then there would be penalty. It is something that was covered by earlier folks also, that the banks would prefer late payment, because then they would be able to collect the penalty. But given that that kind of like spoils the relationship with the customer, where he kind of like comes and begs you to remove that penalty, because that penalty would, at least in our case and in case of other customers, would go down all the way to the audit report, where you have to kind of like mention that this is a penalty, and it would be looked down by a lot of people who would be looking at that. So that automation and the tools that is provided by various companies, including some of the panelists, has helped us a lot for us to get the money on time, and has helped primarily the customers in terms of like, hey, I got the money, let me use the product, but the collection part is automated, and that has helped us getting the money, and the customer is also not worried about, and at least not taking stress. So that is another element.
Very interesting point, Sunil. And my apologies once again, right, for being away. But Gaurav, I'm going to come to you, right now. TTBS has become a much larger player, right? From being a connectivity provider, something that I kind of mentioned too, right? Now you've pretty much become an evangelist of technology, right? And transformation. You're at the heart of it, right? We spoke of the size of SMEs that exist, right? And this transformation is very, very important, right? Now, before I come to my next question, I think which is very pertinent to each one of the panelists that I have. What I want to understand from you is what's been your experience, right, in this entire scheme of things, right? Because now we are in a connected ecosystem, right? A lot of what we, for example, talking about fintech in general, I think will largely depend on how these organizations transition. So, what's been your experience in terms of engaging and helping and handholding these SMEs, MSMEs into adopting to technology, right? Because that's the new narrative, and that's where you need to communicate the sharpest, right? So you cannot have inconsistencies anymore. There are no two parallel markets that exist in India anymore, right? We're largely shifting towards being a one large homogeneous market in many ways, right? What's been your experience in that sense?
I think, Ashu, obviously, apart from the digital adoption, digital transformation, which has accelerated in the last 3.5 years, what has changed and what has come in the foray, or what has come in the main line is the customer service, right?
Sure.
The customers are not only looking for good service; they're looking for an excellent service, probably because of the time that we have faced, right? We faced the time where we are getting we're getting a medicine delivered at home. We were in a time where we were actually getting our vegetables delivered at home, our groceries delivered at home. So the expectation, the customer service has gone a notch higher in the last 4 years, right? 3 years. I think that's where organizations like us, who've been helping SMEs, have been able to work with those organizations and provide a better customer service. I'll tell you how.
Right.
During this whole COVID era, there've been a lot of SMEs or a lot of medium organizations who came to us to set up a contact center, right? When I say contact center, a typical 1-800 number or a single number where the customer can dial and get various kind of help.
Sure.
And that's where we as an organization were able to set that up for them. Were able to give them kind of the customer service that they were looking for, and provide various other tools and services. Similarly, right. A product like a Zoom, right? You mentioned that in the starting of the call. We understood the need of the digital collaboration, right? I mean, people were working from everywhere, whether it's a mountain, whether it's a beach, right? You wanted a tool to connect to your customers. You wanted a tool to connect to your employees, right? And that's where we thought, as an organization, we should come back and say, we should come back and deliver a product which will help not only the smaller, companies, but to a certain extent, larger organization, because, the digital collaboration tool are always there. It's just the adoption. And that's where we as an organization played, I think, a decent role by helping them adopt those technologies.
Very interesting. Important point, right? So I think Gaurav, why I asked you that question, right, is because I wanted to sort of get to this point, right? Now, what is happening, and my sense is I think each one of you is in a very good position to sort of answer this question, and I'm going to come to each one of you, with a certain perspective, right? But largely the question to this panel is that we have shifted, right, into being one large economy, right, in many ways. The unfortunate part is because we've existed in many layers, right? This adoption is slow, something that Gaurav also kind of alluded to. While of course there is infrastructure which is available, now that brings in a lot of inconsistencies when you talk of, say, fintech enablement, the speed of overall transactions, so and so forth, right? Now that essentially opens up a variety of risks, right? Abhishek, I'm going to come to you first on this one, right? Is that because of these inconsistencies, right? Because of say a tier 2 and a tier 3 India, which exists, right? And where a lot of these SMEs, MSMEs kind of based out of, and my sense is you are spread across fairly, the length and breadth of the country, right? Does that exposes you to a very different kind of risk? While there could be a part of the portfolio that you're kind of dealing with, which is very agile, which is adopted to technology, right? And that is, say, kind of that has lesser risk, right? The agility is much faster, but then there is this side of India which is kind of still grappling with changes, and that could possibly, and because the consumer base is already kind of made, it becomes very very complex for them to possibly survive, right? And that could essentially mean that you know. Say the repayments and the entire anticipation that you have around the portfolio could be of a very different kind, right? What's your sense of it? How do you crack this, the risk aspect in the changing, in the transitioning economy that we are, and largely because I was possibly wouldn't have asked you a question if we were already a homogeneous economy, right? We are an economy with a lot of baggages, and you understand, right? A lot of those nuances play in because of these regional consumption patterns, right? That a lot of these SMEs, MSMEs kind of cater to. What's your sense of it? How do you crack it?
So, and there are multiple risks. I mean, while we're talking about the credit risk and the agility part of it, let me kind of take a few of these into context. So, credit risk wise, and look at any data, there is no evidence to prove that a tier 2 city borrower is worse than a tier 1 borrower. There's actually enough data to show that the underserved population, which is tier 2 and 3, is actually a good borrower pool. And they sometimes just being away from all the noise also keeps you away from all of the gray area that you could get into. And so we've seen our portfolio, if I divide it into tier 1, 2, and 3 cities, our tier 2 and 3 cities have a lower default rate than a tier 1. And that's because there's so much choice, there's so much of options, there is so much that you can skirt around it. Is what leads to that. So the credit risk wise, I don't think as a portfolio we have a concern around it. In fact, we see a large opportunity there. Now that opportunity got magnified because of the fact that now it's digitally available. Earlier, for us to get to a footwear shop in Patiala was very difficult. How do you get to that customer? But now they use a Google Pay, now they use a Phone Pay, now they use a Paytm. And so it's easier to get through embedded finance to that person and offer credit to them. So there is definitely opportunity which far exceeds the risk side of it. And also, lending is all about pricing the risk. So it's not, I mean, somebody could be as a portfolio could be 2% higher on NPA, but their ability to pay and their willingness to pay is much higher than 2%. And you can offer that because of whatever reasons the risk is high, because of the cash flow inconsistencies, because of working capital needs. I'm not talking about the intentional fraud. I'm talking about the ability to pay issues. So there's enough and more to actually now price the risk also. And it's even able to do that really well. The agility around customer interactions, that's why I just want to spend a minute on it. हमको लगता है कि a tier 2, tier 3 city guy is actually digitally less savvy. Okay? That's what the general assumption is. Today, they operate on Facebook, they use WhatsApp, they're able to share videos and photos, they're able to click pictures. That's all you need to take a look. Nothing else. So I think there is no gap in terms of digital reach and digital savviness for a tier 2 or 3 borrower compared to a tier 1.
Interesting one, Abhishek. I'm going to bring in Kashish, right? But just a quick point that I want to make, right? I mean, there are many questions that I have on that one, right? And of course, on the on the behavioral tendencies of the consumer, right? And how, for example, we're becoming one large market, right? Essentially, it's going to be a connected market, right? Where the arbitrage is going to go away, right? And I think I'm going to possibly save a bunch of those points for our next conversation, Abhishek, because I think we need to spend a little more time in terms of how this portfolio, where it currently stands, right? And how do you possibly see it, over a period of time evolving? Like I said, right, a lot of this consumption is moving in a digital environment, right? But I'm going to save that for just in a bit, right? But Kashish, I'm going to come to you, right? Now, you are essentially in the business of basically litigation financing, right? Now, you are essentially focused on a lot of disputes that are, say, arriving out of SMEs, MSMEs, portfolios, right? What's your sense of it, right? Well, of course, I hear Abhishek on what he says, right? And I kind of understand what he's trying to kind of highlight, right? And the behavioral tendencies and possibly the conservative nature, which also sort of plays as a hedge, right? But what's been your experience, right? I mean, the kind of business that you are in has been on uptrend, right? The disputes have been going up, right? What's your sense of it? How do you see it?
Very fair, Ashu. And more than disputes, I would say it's about the problem of recovery. I mean, the
Sure.
pace at which BNPL and the lending of unsecured book has been with
Right.
one of the prominent lenders that we work with. For them, I think the problem is of not the churn or recovery of the money.
Right.
It's the quick and hassless recovery. That's
Sure.
something that we provide. In
Right.
addition to that, we give them an upper hand that we'll fund the entire mechanism with you. You don't even need to spend a single penny of a recovery. We'll do it
Sure.
for successfully. So that enables them to focus on their core operations. When it comes to having a value prop for the business, when it comes to consumers, I mean, as Abhishek rightly said, barring the ones who have an intention to pay, there
Right.
are various genuine scenarios which would have crept in.
Exactly.
Well, we come into play not just in terms of recovery, but also in terms of settlement and
Right.
helping them route it through a mechanism which is much more secure, which is much more trustworthy. And as I was speaking with Gaurav as well, we're in the business of trust. And when it
Right.
comes to trust, the other leg is very important, is how we enable them. So I think it's a
Interesting.
much more convenient mechanism for us not to go into the disputes. I think disputes is one leg of it. The
Right.
insolvency vertical is also very loose in terms of what we focus. And insolvency in itself has been a problem for India for over the last 2.5 decades, where we
Right.
had DRCs, we had SARFACs, DRTs, and now IBC. But IBC has been game changer for the entire economy of the last 5 years. The kind of resolution that has happened, the quickness, the speed, agility, and the self-evolving nature of the entire IBC, that's phenomenal on the part of structuring. So I wouldn't say there
Interesting.
are loose ends to it. Definitely there are loose ends to it, but the phase in which economy is growing and the quickness or the speed or the agility is, I think that's phenomenal.
Interesting. Kashish, thank you for doing that, right? I mean, I wanted a view in terms of how, say, for example, the opportunities are kind of opening up, right? Right, and these are opportunities that are not essentially tier A opportunities. These are opportunities which are pretty much across the country, right? On what Abhishek said, right? And I think there's an exponential growth, right? And that's largely because of the systemic risk which is now coming in, something that you kind of alluded to, right? Ashwin, I'm going to come to you, right? Now, Sunil highlighted a very, very interesting point in the course of conversation that, experiential is something that is being a positive when you talk of, say, traditional banking ecosystem, right? And as soon as digital happened, even fintechs, for example, now have to think of and building an experiential leg of sorts, right? With what you're offering and escrow pay with escrow pay, right? In a way, is a mechanism which is pre-event, right, and not necessarily post-event, right? In a way, you are improving the experience, right? You are giving an environment of trust, right? What's your sense of it, Ashwin? When you think of the experiential side of it, I mean, how do you see it growing thicker, right? And you're at a vantage point because you're working with many, many organizations, right, who have adopted to escrow as a very critical solution in the larger scheme of things, right? What's your sense of it? Will the digital ecosystem be able to, with solutions like escrow pay, and escrow in general, right? Tide over these inefficiencies that exist, for a market which is as complex as India is, right? To go out and offer these solutions. What's your sense of it? How do you see it? You're on a mute, Ashwin.
Sorry. Great question, Ashu. And I believe that, whatever time we've spent, last 7 years in this industry, we realize that it holds just three fundamental ingredients to delight your client, right? And one is success, for which the client is coming to you, the task must get completed.
Sure.
The other is the effort. With the lesser the effort and the outcome is super, the wow factor, that is pretty important. Third is the emotion. So did they get exactly what they came for? And let me give you an example of how India is changing. So, you must have seen lending. I was hearing about, the tier 2, tier 3 cities, how people are not different. They use technology and everything. Taking you one step further to agriculture, to give you an idea. Now, agriculture, for example, a farmer and there is a trader in Delhi, they both want to transact. So we now service platforms that are aligning both of these stakeholders through an escrow mechanism. And by the time, the truck is loaded, the consignment is loaded and to be delivered, the fund is collected in the escrow account till the time there is transportation or logistics time period required. So I think India is changing, and believe me, farmers are so comfortable now in terms of, signing up digitally the contract, using our services on WhatsApp, for example, digital issuance of escrows on WhatsApp. They are accepting payments or collecting from all rails in terms of payment gateways. And these transactions are not small. When you talk about a truck, for example, it ranges anywhere between 20,000 to 40,000 rupees a ton per se, and the truck capacity, it ranges anywhere between 7 to 8 lakhs as a per truck transaction. So India is changing, and I think we are very proud of the fact that the role the fintechs are bringing, like somebody said, embedded finance, pretty important. BNPL, extremely critical. Similarly, escrow is very important in terms of bringing or enabling trust in transactions. I think that's at a very important segment where we are. So agriculture, of course, is one very huge section. Secondly, I believe banks need to upgrade their technology. So as a bank to keep on upgrading and taking these decisions on where to invest and what to do and how big to do, it is important. And somebody said right at the initial stage when we started this conversation that it is, I believe, the right time for banks to join hands with fintech companies, and I strongly support that, because fintechs are faster, and this entire session is on agility. I believe that the agility element is pretty important even when you're servicing clients. And for us as our business, even the banks have become clients now. We've got an equal seat on the table. We discuss that how the business is to be treated. We customize solutions for each bank and make sure that the solutions reach out via their branches and distribution channels to make sure that the clients get serviced. And the business has been rapidly growing. And I believe that, I completely concur with the gentleman who said that fintech is the future. And I strongly believe and concur on that fintech will rise. It's a rise and rise of payments at every level. And whatever innovation one brings in, whatever you can dream of today, it can be built in India and can be used by everybody.
Interesting. Ashwin, we're not letting you go, right? We're not letting you go, right? It's not the closure of this thing, but this is an interesting point that you highlighted, right? Now, I think one thing which is very pertinent, right, is that the construct of fintechs is that they're not necessarily getting into the infrastructural element, right? They're essentially largely focused on ensuring that the consumer experience is phenomenal, right? Something that has been discussed through the course of conversation, right? Now that essentially means, so your ability to go out and deliver this experience very consistently, right? And I think which is very unique in each one of your case, and I'm going to come to you, each one of you very specifically on this one, right? Is largely dependent on the backend infrastructure, which is which is essentially provided. Say in lending, you will have NBFCs, you're going to have banking partners. Sunil, in your case, they're again going to be NBFCs and banking partners, right? Depending on your relationship with them. In Ashwin, your case, again, banking, because the core banking, you're sitting on top of core banking, right? Kashish, in your case, you're dealing with legal infrastructure where the challenges of a very different kind, right? But Sunil, I'm going to come to you first, right? A lot of what you are trying to deliver on the consumer side of it is dependent on how your partner acts and reacts, right? What kind of challenges have you seen as far as that front is concerned? Because these are fairly large players, right? While of course they've been very serious on technology, it's also a time-taking process, right, for them to tide over and all that. What's been your experience on that front, right? Like I said, a lot of what you do is on the consumer side is dependent on how your customer at the back end engages, right? So your agility is essentially a function of how fast they are, right? I'd love to hear from you. What have been your experiences on that front, right? Is this been a challenging journey? Is this been a journey which has required a lot of gumption and a lot of convincing for them to get better to ensure that you do your servicing better? What's been your experience? Love to hear from you.
Sure. So, Ashu, I will start with when we started. So, the second largest private bank with the offering that we had in our mind, which is corporate credit cards for private limited companies.
Sure.
They kind of like came back and said, hey, we have this offering. If you want to give a corporate credit card, you have to follow our processes, which is our person will go to the customer, will collect all the documents, and the entire journey will take whatever a month or so. You can cover the risk part of this by providing the entire collateral of the credit limit. That was what they communicated to us, and we said, fine, maybe this is how we will start. That's how every bank would react. We reached out to multiple other banks, and contrary to what a lot of people think, the smaller banks are actually much more technology advanced or much more looking forward to enable technology to deliver the services. Imagine, if you're just, running a bank and you have, let's just say 100 employees, but you want to serve, the million customers. So what would you do? Your choice could be like, have more people, do more digital advertising, serve them and whatnot. But some of these digital first banks realize that why don't we partner with fintech for the customer acquisition, for serving the customer, which means the customer support as well, and providing the product also. So instead of reaching out to all these big banks that we were doing in the earlier, we started reaching out to all the small banks that are out there, including some small finance banks. And they, in fact, didn't even have a corporate credit card product per se. But they wanted to serve the customers that we were targeting. And we worked with them to build the technology platform, which aligns with their process of RBI, and everyone else in the ecosystem, like some of the players that are out there, whether it is NBFC or whether it is somebody else who is doing the collection. So we built the technology platform, we got all those players, and then only we were able to basically provide the customer delight that you mentioned. Because the customer applied for the card, he came to our platform, we did the KYC check in conjunction with the banks, and we were able to provide the corporate card sometimes on the same day or the next day through that technology platform. So what I would say is that the mindset is changing. Unfortunately, COVID brought in a lot of digital mindset, and banks are now open. And when they look at the volume that you are doing, they want to now engage. And that private bank where we went like right in the beginning now wants to partner with us, because they feel that they want to get the customers that we have, not in terms of corporate credit card, but their CASA and other businesses service that they could sell. So I see a lot of future in the collaboration, and the small banks are first to go with, because you are able to communicate with the CEO if need be. But the big banks will also come and partner with you once you have shown the growth in your product.
Interesting. That's a very interesting point that you kind of highlighted, Sunil. I think you're being kind, right? In many ways, I have had the opportunity of talking to many fintech founders, right? The challenges have been many, right? I think it started from a moment of skepticism, right, in terms of what these possibly startups can do, right, to now, of course, getting serious, right? But it's in the meantime, it's been a difficult one, right? Abhishek, I'd love to hear from you, right? You're a marketplace, you're dealing with a lot of institutions, right, that are sitting on cash, and you become a channel partner to deploy this cash faster, right? How has this been for you, right? How is this the entire infrastructure? And you kind of highlighted, you alluded to it in one of the points that you made. But how has this been for you, right? How has this journey been for you? How has the communication process been for you? And like I said, I mean, similar question to what I asked with Sunil, right? That you're engaging with the customer, you're engaging with me as on the who has very high expectations, right? You're committing to a certain speed. How has that relationship been, right? Have you had challenges there? How have institutions reacted to it, right? And where are we headed? Of course, 2020 has gotten a very different kind of seriousness. Digital is here to stay. But what's been the journey like? Would love to understand that.
And I mean, for us, which we call as a co-lending model is incredibly beneficial for this ecosystem to grow, because as an early stage fintech, you always need access to capital. Now, in the absence, and where is the capital reservoir sitting? It's with banks. And if we cannot utilize it, then we're effectively, as an industry, missing an opportunity. So RBI has been progressive and forthcoming about creating these guidelines and then enabling all of these. So the intent is established. There is a need, there's a product market fit. So we should do it. The capital is available, and there is also strengths on both sides. There's a cost of capital on one side, there's the availability of customers and origination on the other side, and the risk understanding with us. And so we can represent the customer, underwrite the customer, but use capital from a bank. So far, so good. Now, when you start integrating the two entities from a technology perspective, there's a wide gap. There's a wide gap. Some things that should take weeks to do will take months to do. So the model is evolving. There are players who've invested into building their co-lending and API layers from the banking side so that they can work better with fintech. Now, if you just accelerate a little bit forward what hasn't happened into the future, think about how Open will be when it becomes the real, the everyday thing. Today, Open Credit Enablement Network is effectively restricted to invoice financing. But the moment it starts kind of bringing personal loan providers, business loan providers, and everybody else on board, then almost anybody who's not on that platform is losing out. So it's table stakes now. I think everybody will have to develop their API layers to get onto OCEN. Now, we were effectively the first OCEN. We were a private network enabling this flow from an LSP being a TSP to a capital provider. The moment it becomes democratic, then I think it's like UPI moment. Then everybody can benefit so much from it that everybody will invest in the right technology. But it's happening in silos. Probably out of 100 banks, I can see 10 banks are serious about it, but others are coming on board.
Very interesting. Kashish, I'm going to come to you, right? You possibly in one of the most fractured ecosystems, right? When it comes to say information dissemination, availability of information, right? Records getting updated and so on and so forth, right? Now, in your case, credit decision is essentially a function of what's happening, right? What are the judgments like and so on and so forth, right? And this is not a consistent ecosystem, right? What's been your experience on the infrastructure side of it, right? How are you playing it, right? And in your case, there is a lag, right? Of course, you and your team are kind of working to reduce this lag as much, right? But unlike others, right? Unlike Sunil, unlike Abhishek, unlike Ashwin, right? Who have a partner who's now become very agile, right? Because there's a cost of funds, right? Sitting in those accounts, right? They have no other option but to be very, very agile, right? So from skepticism, it's become a very serious relationship, right? Now institutions are actually looking at them in a very serious way to deploy this capital, right? They're the modern day distribution partners that a lot of these institutions have, right? In your case, what's the scene right now? I mean, where are you and how are you dealing with this, like I said, the inconsistent infrastructure that exists? How are you kind of taking care of that?
Very fair. And I think I'll allude to the same fact which Sunil and Abhishek were making, because the banking partners are so evolving in the scenarios for us. The NBFCs are much more reciprocative when it comes to the supply side. The small finance bank that we're working with, now they are reciprocative of what we are providing. They are getting comfort, but definitely takes time for them to get comfort. Essentially, what Sunil said, the initial players who we are speaking with are now coming back to us with a much more feasible solution of integration. That's one. Second, when it comes to data symmetry, I think that's where we essentially bring into the play of technology a much, much larger play, that we think what we are doing in the system is not just the financial data that we scrape and mine, but also the legal data, the operational data, the secondary primary data sources. For us, it becomes an entire ecosystem. I mean, possibly we could provide much, much larger litigation, legal, financial and operational related data points than any lender could do in Indian domain. I think because we are not just a lender, we are also a financier. So it gives us an opportunity in terms of the legal, financial, operating, primary, secondary data sources that we have. So we capture almost 100 plus point, very detailed data points before we underwrite anything. So I think
very interesting.
Much more leverage in terms of the technology that we use.
I think that's a very unique advantage that you have, right? And I think a lot of people who are in the lending ecosystem, but come from a certain industry, right? So industry takes precedence over the lending framework, right? You tend to merge all of these aspects in, right? Not that the other players are not doing it, right? It's just that you start factoring in some of the larger risks, right? That possibly in a generic credit underwriting model will not necessarily be looked at, right? Possibly the mechanics are going to be different of the products that are being put out, right? Gentlemen, we're towards the end of our conversation. A couple of very, very important points that I want to discuss, right? Now, while of course we've discussed, the vagaries of the market, right, and how the market is kind of transitioning. Another thing which has actually been very consistent across, and I'm sure each one of you has a take on this, right? And I'd love to hear from each one of you. Has been the spread out teams, right? Infrastructure. Because of all of these lockdowns that we've continued to see, a lot of especially startups, right, have gotten into distributed teams, right? How's been your experience in managing these teams? Has this been easy? Has this been difficult? Of course, for certain players who started a little early, there was a certain camaraderie and association and a relationship that was there, right? So that transition wasn't necessarily very difficult, possibly early teething troubles, but it got back to normal, right? But I would love to hear from each one of you. How have you managed those bits, right? Abhishek, I'm going to come to you first. And Ashwin, I'm going to come to you after this. Abhishek, what's been your experience?
Ashwin, you're talking about the industry interactions with.
I'm talking about the teams, right? Internal teams, right? Of you wanting to consistently deliver. At the end of the day, it's about delight, right? Now, teams being spread out, right, becomes a little bit of a problem, right? There are a lot of those issues. How's been your experience managing the team, motivating the team? staying connected, right? How's that been?
I mean, of course, a lot of technology has come in to make the interaction better. So, and you have to kind of when you work in a collaborative environment, there's interaction, and then there's deeper interaction, and then there's real problem solving. And it's a spectrum. So the interactions are sorted. I mean, we can get on a call, we can get on a Zoom. Everything is fine. When it comes to meaningful, deeper interactions, and I'm not talking about just professional, but also getting to know each other, personal side of it. I think that takes a lot of it. I mean, us sitting at home, team sitting in silos, clusters, different cities, etc. For there is joy of being at home, but there's also the FOMO of not being in office. And it plays out. I mean, it plays out in your mind. It plays out in your overall effectiveness. And then there is the whole other side of it, which is, are we ready to build or solve India's largest problem of credit under penetration? Without just being together in one office, at least for a significant period of time. And I feel that depending on the organizations, there's a maturity curve. Some are at that stage where it's more status quo and it's fine. We at least believe we are not at that stage. We believe that we need more time together, more whiteboards, more brainstorming, more just evaluating ideas to be able to be more effective.
Right. Ashwin, awesome. Ashwin, what's been your experience? I'd love to hear from you, right? Of course, you existed even before, you started even before COVID, right? So, there was a team that you were, in fact, I have had the opportunity of knowing you much before, right? I've seen you build that team from scratch, right? So, of course, there was a little bit of an understanding that was there, right? But you've gone through your rounds of funding, the team is exponentially grown, the consumer base has grown, right? How's that been for you to sort of ensure that everybody's kind of connected, motivated, and like Abhishek said, right? There's connected, you connect with people, and then you connect with people at a deeper level, and then there's work, right? So how's that been for you?
I think our core foundation has been digital right from the start. And currently we operate out of 5 cities. The team is sitting in different cities, and I would say the past experience of 2 years, top outcome per employee. We today, very proud of the fact that we serve clients like Reliance Industries, Aditya Birla, the group, Amazon, Hero Group, and so on. So these kind of large clients that we are, helping them process payments of. I think it's pretty important that the investments from every fintech go into technology, and that's what we have been doing over the last so many years. We have been very cautious in terms of the capital efficiency. We've raised our rounds and used our capital in a way in which maximum investment goes into tech, so that it is lesser of human intervention. And at some point of time, just taking a cue of an earlier question that we were discussing, we believe that there are about 8 stakeholders in our business today. At some point of time, I think the bigger dream for us is to basically own the entire journey of the consumer. So there is no requirement for any stakeholders that we work with, and you become or kind of a forward or a backward integration in a way that you own the entire piece end to end. So that's a dream which we are sketching right now, and at some point of time within our journey, we'll be owning the entire thing. And of course, based on regulatory compliances and what kind of approvals one can get. But the dream is to basically speed up in a manner in which you control every element of your service. That's where we are.
Gentlemen, I had a little bit of a trouble, right? We used to interact a lot with call centers, right? It could possibly be a service call, it could be an acquisition call, whatever, right? And you continue to hear, a variety of inconsistencies, right? And I think you kind of that's been a change, right? I don't know how each one of you have kind of taken care of that, right? But that's been a funny side of the work from home culture that is kind of evolving. But I think one thing that I kind of hear from you, and I think each one of you, right? While of course, when I'm discussing it with say traditional player, one thing which is consistent is that they want to go back to the infrastructure that they've created, right? They're craving to go back to the infrastructure that they've created, right? But I think when you start talking of startups, right? When I talk to each one of you, I think one thing which kind of stands out is that a lot of what we are talking about is here to stay, right? Possibly senior leadership will kind of come together, will converge together, but a lot of operational aspects will continue to be distributed, and I think that's going to be the way forward, right? Gaurav, I'm going to come to you on that one, right? I mean, we've alluded to this, right? You represent Zoom in India. Connectivity has been a big challenge, right? Zoom naturally sort of came to us. While of course, on one side we have these startups, right, which are extremely agile, which are, like I said, right, built on technology. have a deeper understanding of it. Right? What's been your experience on the SME MSME side, right? When it comes to adoption of connectivity tools, right? What is it that you've sensed? Because that's also a big gap area, right? Traditional organizations want people to come back, right? Then there's been a little bit of a tussle there. It's not been very, very happy seen, right? But what's been your experience, right? Is that changing? What are we seeing?
So I think before I answer this question, I think I'll go back to your earlier question in terms of when you asked about the team collaboration. I think a lot of credit should go to karaoke competition that we used to have over Zoom, right? Because that kind of brought the team together, right? I mean, nobody would have thought of virtual singing competition, but we used to have it. So the team was very cohesive, was very was working in a very collaborative manner. But yeah, that's on the lighter side. Coming back to your question of how has SME been reacting to this whole situation? We, as I said, Ashu, we've been interacting with a lot of SMEs across the country, right? I mean, there is one thing for sure that has come across very straight up is that this hybrid model is going to stay, right? I mean, we're not moving away from the from the virtual world or completely shifting into the physical infrastructure that we all created 4 years back for us. Hybrid model is here to stay, and if hybrid model is here to stay, irrespective of the lesser or the bigger amount, the SME will have to invest in some kind of infrastructure, right? Whether it's Zoom, whether it's as I said, the contact center that they have built up for the customer service. So it's been a mixed reaction. But yes, the good part is that the SMEs have now realized the importance of the digital transformation and digital journey, which I'm not saying earlier was not there. But yes, there was some hesitancy involved because of the cost, because of maybe the mindset of the people sitting at the top. Because I always talk to SME and I tell them the journey of a digital transformation always starts from the top, right? You've got to have that belief that this is something that you need in the organization, and don't look at it as a cost. Look at it as a part of your infrastructure. Look at it as a part of your maybe a 20 years journey down the line. So I think it's been a mixed reaction, as I said, but yes, the SMEs have adopted it well now.
Interesting take, Gaurav. Gentlemen, my last question in this, and a very, very important question, right? Now, with this digital transformation, right, and transition that we're kind of seeing, right? I mean, we have to discuss about cybersecurity. We have to talk about data privacy, right? Now, I don't want to question. I mean, it's become important from a consumer standpoint, right? People have started to take a lot of this very, very seriously, right? There was little awareness. I mean, we were never necessarily very serious as at large, right? But ever since we've started to engage so much more across these 4 or 5 screens, right? This is something which has become so much more important for organizations, especially a lot of fintechs, right? Because there's a lot of proprietary information around a customer that you're kind of dealing with, right? You have insights into a lot of aspects. I would love to understand how are you kind of prioritizing it and how are you tackling it. Sunil, I'd love to hear from you on this one.
Ashu, if I could request Sunil, if I could go first, and I have a 12:15, so I need to jump on.
Yes, Abhishek, please.
Sorry about that.
Please.
So just quickly, my thoughts on this, Ashu. I think there is a lot more need for out-of-the-box solutions on cybersecurity. At this point of time, it becomes a large kind of arrangement with a bunch of vendors doing multiple things, and it's not as seamless and straightforward as what an antivirus used to be to put in a laptop. And so it needs to get to that point from a journey perspective. I think it comes as an afterthought today for most organizations.
Right.
It doesn't come as the first thing that you would do. First get X, then Y, then they get data in, and then encryption of data. And at some point, yes, cybersecurity. And the journey that I think needs more education and awareness. There's a lot more that has happened, and the number of hacks that happened in the last two years has been incredibly high. It's just exponential. So there is a real threat out there, and it has a business value to it now. Earlier, it did not. There's a reputational risk, there's a business risk, there's a lot of other things. And if you put it all together, I think for a CEO, that should be the first on the agenda. Interesting.
Abhishek, thank you so much for doing that. I'd love to have you with us. I know we are running a little late, but we're gonna cover this across the upcoming conversation that we're gonna have with you. Thank you so much for joining in. Sunil, I'm gonna come to you very quickly. What are your thoughts? Abhishek is, of course, given out his. I'm sure the sensitivity continues to remain the same, right? But love to hear.
Sure. So the thought process is more or less same as what Abhishek said, because the customers actually come to you only when they trust you.
Right.
Are you going to keep their data secure or not? So
Right.
we all talked about various customers. So we have bank statement of, let's just say, Unacademy. We
Sure.
have the KYC of their CEO and things like
Right.
that.
Sure.
And they have trusted us with that data, assuming that that data could not be leaked.
Right.
Because that is very confidential data. And some of that data could be as simple as, the PAN number of the CEO or the salaries of the employees that is present in that bank statement. So, right, before COVID happened, we decided that, we will have an entire rollout of the VPN system to all our employees, and all the data can be accessed through in a controlled environment.
Right.
And then also we will have some monitoring tools so that the data is not leaked even by a mistake or by an attack. Then
Interesting.
we did another thing, which was we asked an outside vendor to come into our system and basically do the stress test. So
Right.
that's the second step that we did to ensure that we have systems in place, so that our customers are not embarrassed because they have trusted. And only when they trust, they will give us the data, because I think that trust part is important than the product that we are offering. So we put in a lot of systems in the place, and that is something that was on top of our agenda to start with. Let me quickly answer one more question that you
Please.
asked earlier. We talked about remote work, and we talked about technology infrastructure and everything, which is great. What we have done differently, and I think some of you guys would have also done, is think of employees not as a resource, but as an individual. Let me
Right.
share some examples. So let's just say, we had one employee whose mother was sick, and he had to basically take her mother after
Right.
every 2 days for dialysis. Now,
Mhm.
when he was working from the office, the problem is not right in front of you.
Right.
But in this case, the problem is right in front of you.
Right.
There were a lot of family members, who fell COVID, who had COVID. So what we need to do, especially in this remote environment, is just go little beyond the KPIs, but try
Interesting.
to understand what that other person is going through and what their family members are going through, and
Right.
give them space. I know a lot of people complain that they work like 24/7 from home.
Sure.
So you give them that flexibility that what we will focus on tasks, not
Right.
necessarily what time you came in and whatnot. And kids are everywhere. Like during this call, also my kid came for something.
Right.
So you have to accept that and not
Right.
try to say, "Ki boss, this is my customer call, investor call, and whatnot," and
Right.
say, "Boss, you don't come, lock the door and don't come in." So
Right.
we have to adapt to this and think of the other person as more
Interesting.
as a person rather than just a resource that he has to deliver on KPIs. And that is what I wanted to say.
No, I think that's a very interesting point that you've kind of highlighted, Sunil. I mean, we can have all the fun and jokes around all of these aspects, right? But I think at the end of the day, we need to treat people as humans, right? We cannot continue to be very KPI driven. I think we have to have that sensitivity because at the end of the day, that's how a concerned society grows, right? That's the foundation of a concerned society. So I completely agree with you on that point. And possibly, when we have that independent conversation, we're going to cover some of that, some of the things that you've possibly done. And I think that's going to be a takeaway for many people who are going to be, watching that interaction, right? Ashwin, I'm going to come to you very quickly. Again, what are your thoughts on cybersecurity and data privacy? Again, you're in a very sensitive position. What are some of the things that how do you look at it, and what are some of the things that you've been able to do within Escrow? You're on mute, Ashwin.
Sorry.
Yeah.
I'd like to answer it in two parts. First is, of course, at Escrow Pay, it's all bank grade data protection that we do. That's a simple sentence that covers every aspect of the question. But on the other side, that there are conversations going on, especially in countries like the US or some of the other countries in the European Union. What is there to hide, right? What can I do? You click a button, what is the name of the company, who the directors are, your address, your company information, the CIN, incorporation number. You get to know the PAN. There are ways to get the GST. The other thing is, what else can you do with it? So let's assume I have your PAN number with me today. Where can I misuse it?
Right.
I mean, tell me, what can I do with it? Everything is OTP linked, right?
Right.
There's no, so the world is now discussing, or some of the countries are discussing, why hide anything which should be publicly available? Nobody can misuse it, right? There are blockchains running behind it. There are certain elements, the protective layer is running around it. Especially if you see US or other countries which are a little ahead in terms of technology on that account, you'll even get to know how many children they have, what schools they go to, what classes, who the wife is, who the husband is, how many people live in this particular home. What's there to hide? I don't understand. So when you talk of trust, the trust should be an open element, which cannot be misused. So I think India is progressing in that direction, especially when the digital rupee is coming up, has been announced by the Honorable Finance Minister. I think things are changing, but on account of data protection, I think we are fairly, as a business, as a country, or as banks, we are currently in a very, very good position in terms of the bank grade and data points that we have.
I think Ashwin, I think the sensitivity needs to, I think for a country like India, it just becomes so much more pertinent, right? And that's largely because, we exist in many layers, right? Possibly you, me are privileged, right? In many ways, we understand, what we're doing, our actions, right? And possible repercussions that could happen, right? But there's a large set of people that still need to be brought onto that engine, right? I mean, think of it, right? How many people had accounts before, say, a Jandan kind of an initiative came up, right?
Ashu, they are already on that. They are already on that engine, right? When they have an Aadhaar card, they're already on the grid.
But that's exactly what I'm saying, right? So when we talk of, say, an open ecosystem, right, where every piece of information is available, I think that possibly is going to require some more time, right? And I think till then, organizations need to be a little more, concerned about how they sort of spend for them. Kashish, what's been your what's your understanding, right? On the cybersecurity, data privacy side of things, how have you tackled it? Would love to hear.
See, the best thing I think that enables us and do things differently is because of the fact we come from the same MNC culture. We understand how important data is, and possibly we deal with the most classified and confidential information. That's not just financial. That's also legal, that's also operational. That's way, way beyond more sensitive than any other fintech or bank would have, because you are now dealing with the information which is not just can be a financial repercussion, but also the repercussions can be on your legal side as well. So for us, from the day one itself, we had a point to have VPNs, we had Chinese walls in place, we have data in the system only to the person, and our data was classified in 4 different buckets: need to know basis, classified information, super classified, and very, very confidential and proprietary data. All these 4 layers are bundled together via NDAs, not just with us, the attorneys, with us, and the client, with us, and the investor side that we deal with, but also within the system itself. So for us, it's a very, because our first name signifies legal, and we have to ensure it at every step that legal or risk parameters are something that we keep on track from day zero, and we use technology very extensively just to ensure, because the nature of information is very, very classified, what to deal with.
Interesting point, Kashish. Gaurav, I'm going to come to you to summarize on this particular point, right? You've been evangelizing cybersecurity and data protection pretty much all across, right? Would love to hear from you, on how are you looking at it, right? Like I said, right, you've been evangelizing for the longest time. You've been kind of putting in a lot of effort, and when I say you, as in TTBS has been putting a lot of effort to ensure that organizations understand. I mean, startups, of course, like I said, are far more agile, but Abhishek kind of alluded to it, right? That there are still many players who are essentially dependent on just about a few vendors. There are a lot of hacks that have worked. Possibly Kashish, Ashwin, Sunil are in a better position, right? But then there are many other startups that are in an inconsistent environment, right? What are your thoughts on the cybersecurity and the overall data privacy side of things? Abhishek mentioned a very important point, that there's a huge reputational risk, right? So the seriousness around this particular bit has to be very, very high. Would love to hear from you. What's your sense?
So, you've very well said, Ashu, and I think Abhishek, already pointed this out. It's not only about the data loss, it's about the reputation loss. And with the reputation, you're talking about, losing a crores of orders or whatever, So, and, there's been a study, which I think I talked about with you earlier as well. which says that we're going to have around $30 billion of data, $30 billion of loss by end of 2030 because of the cybersecurity attacks, and we've seen that in the recent past as well. As far as our organization is concerned, we've been very vocal. We've been very we've been very you can say we've been playing on front foot for the SMEs to talk and actually use cybersecurity as a measure in their organization. As I said, the moment you try and put that as a cost, that's where you're going to suffer. Put that as a part of your machinery. Put that as a part of your your whole ecosystem. And I again would like to highlight because in SMEs you need to understand it's not a very typical IT structure that we have. You have a proprietor, or you have a CXO of the organization, and then maybe under him you have an IT manager, right? So it's between only a couple of guys, 3 guys at max, who need to understand the criticality of the cybersecurity tool in the organization. So I think again mindset comes into the picture, and that's where we as an organization, as a marketing team, as a sales team, we try and give pardon our knowledge to those guys, saying, look, this is something that it's gonna this is something that you need it right now, and cybersecurity is here to stay. So that's been our journey, and this is what we've been trying and working out with SMEs.
Super. Gaurav, thank you so much for doing that. I was in a recent conversation with somebody, and he mentioned a very, very important point, right? He said that cost of technology, cost of security has to be considered as a factory cost, right, and not as a cost center anymore. That's your that has to be part of your the product journeys and the processes that you're kind of building, right? It should not be treated and how it possibly was, right? I think there's a need for change in perception. There's a need for change in the seriousness around it, right? And I think this is going to predominantly be the primary mechanics of doing business. Connectivity is what is really going to define how we service our customers, how we engage with them, how we hear them, how we build our product roadmaps going forward, right? What are the other products that we offer? I think that continuity is something which will only be possible in transparent ecosystem, and with technology, cybersecurity, data privacy also become very, very pertinent and important. Ashwin, you highlighted a very important point, right? That in an evolving economy, eventually we'll get to a point where a lot of this is going to be publicly available, right? What do you do beyond that, right? And you possibly, by opening it up, you kind of tackle the risks that otherwise exist, right? In today's disconnected ecosystem, right? Abhishek highlighted a very, very important point, that it is about the reputational risk, right? Thus it becomes important that you have institutionalized support which helps you in your business continuity, right? And continues to ensure that you delight your customer every single time he or she interacts with you. Sunil, the human side of it, which you kind of alluded to, of course, there are many important points that you made, was absolutely heartening, right? I think we need to grow into an environment where we are beyond KPIs, right? It's about happiness of people who work with us. It's about a value creation, and there is a certain belongingness association that we build in the process. Kashish, you're dealing with a lot of sensitive information, right? I think you kind of summarized a lot of what is just so much more critical, right? In ensuring that, of course, you delight customers in a very different way by giving them a phenomenal ROI. But right, ensuring that a lot of this information doesn't necessarily gets distributed, right? Because especially in an environment like the one you operated, right, how it's going to get used or misused, right, is very critical in many ways, right? So to ensuring that it's available in the right hands at the right time for right decisioning is just so much more important. Gentlemen, with that, thank you so much for taking the time out. Gaurav, I would want to bring you in for a quick round of thank you. You've been a brilliant partner, who's helped us bring all of these great founders together. So over to you for the last word.
Thank you very much. On behalf of Tata Tele Services, Sunil, Kashish, Ashwin, Abhishek, who just left, I would like to thank you very much for your time, for your patience, and for your really kind words and encouraging words for all of us. I think Fintech has been Fintech has been the story of the last 2.5 years, right? And there is nobody else, nobody better than you guys to to listen from. And every time I walk into a CXO, I feel okay, I know what are we going to talk about, right? But the moment I come out of it, I think I become maybe 1 inch smarter. So I'm kind of going away with a little more smartness in my head right now. So thank you very much. And Ashu, beautifully you set this up. So great, to hear from all of you.
And sorry about the discontinuity that we kind of had. Look forward to having each one of you with us much sooner. Thank you so much for taking the time out. It was a pleasure to host you and have you. Like I said, right, look forward to speaking with you much sooner. Thank you very much.
Thank you, Ashwin.
Thanks, Gaurav.
Thank you, everyone. Bye.
Ashwin, bye-bye. Take care.